Erase the idea that the national checkbook will ever be balanced. That astronomical ledger of red ink is permanent. Let that sink in Washington. Possesses absolutely zero desire to settle the $38 trillion burden hanging over the nation. They won't tax their way out of it. They won't slash public funding. And they certainly won't grow the economy fast enough to outpace it. The principle is permanent. If you are sitting around anticipating a miraculous return to fiscal prudence from our political class, you are clinging to a ghost. Architects of our global monetary framework understand perfectly well that this math is fatal. They realized this decades ago, and in the shadows, they have been meticulously constructing the most colossal wealth extraction mechanism ever devised, a total systemic overhaul. Designed to vaporize obligations, refill the federal coffers, and siphon your purchasing power with breathtaking speed, the darkest irony? They are orchestrating this using the exact same instruments they spent years conditioning you to despise. The very assets they mocked as barbaric, volatile, and criminal. We are looking directly at gold and cryptocurrency. The identical yellow metal authorities have stockpiled for nearly a century, while convincing the public it belongs in the past. The identical digital coin they actively tried to crush through hostile legislation, courtroom battles, and Operation Choke Point, only to miraculously pivot and embrace it as a cornerstone of national defense. This is not fireside paranoia. These are public declarations. If you study the economic of fallen empires, you know the blueprints are already in motion. Over the course of this presentation, you will discover the exact mechanics of this unprecedented illusion. You will see how they plan to liquidate $38 trillion of liabilities without touching the tax code, without defunding a single agency, and without a formal declaration of bankruptcy. They will honor the numerical value of their bonds, but the currency itself will be an empty shell. By the time the dust settles, your nest egg will be decimated, while their ledger emerges spotless. Begin with the figure that ought to paralyze the markets, yet somehow goes ignored due to its sheer scale, $38 trillion. That represents the acknowledged federal shortfall as we enter 2025. Yet even that staggering figure is a fabrication deliberately omitting the catastrophic unfunded promises of Medicare and Social Security. Calculate those blind spots, and the true burden eclipses $200 trillion. But let us focus on the baseline $38 trillion, because even the best-case scenario is a mathematical dead end. Consider this. Washington currently hemorrhages well over $11 trillion annually just to cover the interest. That money doesn't reduce the core balance by a single penny. It is merely the fee to keep the lights on. That single expense now towers over our military spending. Medicaid and Medicare sitting firmly as the second most expensive item on the national receipt, right behind Social Security. And its trajectory is vertical. Here is the terminal velocity of our financial engine. To scrounge up that $11 trillion in interest, the Treasury is forced to take out new loans because tax receipts fall woefully short. Issuing fresh bonds swells the overarching debt, which in turn violently inflates the interest due the following year, necessitating even heavier borrowing. It is an inescapable vortex. And policymakers face a brutal multiple-choice test with only 3 answers. Answer 1. Explicit repudiation. Simply tell the world the bonds are worthless. This equals immediate economic detonation. The greenback would disintegrate by morning. The interconnected global trade network would freeze. Every pension, 401k, and allied nation holding our paper would be annihilated, leading to absolute civil breakdown in a matter of days. That door is nailed shut. Answer 2. Severe belt tightening. Drastically sever spending and hike taxes to genuinely balance the books. Eliminating the current bleed would require gutting Social Security by nearly half, completely dissolving the armed forces, or doubling the income tax burden on every working citizen. Attempting this is political martyrdom. The populace would revolt at the ballot. Box instantly. Austerity is dead on arrival. This traps us with answer 3. It is the exact same escape hatch utilized by every collapsing superpower when crushed by infinite leverage. You do not tear up the contract. You hollow out the currency. You return every single note you borrowed, but you insure those notes by drastically less than when you acquired them. You burn the debt in the fires of inflation. It is a deliberate, silent siphoning of middle-class wealth straight into the sovereign vault. Economists call it financial repression, and it is actively bleeding you today. The central bank and the Treasury collude to pin yields far beneath the true cost of living. Imagine holding your capital in a bank yielding 2%. Meanwhile, the authentic surge in grocery, shelter, and medicine screams at 6 to 8%. You effectively surrendered up to 6% of your life's work this year. Who gained that lost value? The state. Their colossal debt burden just became profoundly cheaper to service. It is a stealth confiscation. However, this grand dilution carries a lethal vulnerability. If the public suddenly awakens to the heist, panic ensues. Citizens will frantically rotate out of fiat and stampede into tangible wealth acreage. Equities, precious metals, Bitcoin, anything beyond the reach of the printing press. That sudden exodus triggers hyperinflation, transforming a managed decline into an apocalyptic freefall. To successfully execute this maneuver, to erase 38 trillion without sparking a total societal implosion, the architects require two vital mechanisms. First, a bedrock, a universally recognized standard to re-establish trust once the old currency is reduced to ashes. Second, a corral. They must ensure that when the masses finally abandon the fiat ship, they swim directly into holding pens that enrich the state rather than decentralizing its authority. This is exactly why the spotlight turns to gold and cryptocurrency. The authorities sit on staggering reserves of both, and they have been meticulously placing these pieces on the board to underwrite the next iteration of money. Look at the yellow metal. Officially, the Republic guards over 8,133 metric tons, an unparalleled hoard dwarfing the combined vaults of France, Italy, and Germany. The bulk is purportedly locked beneath Fort Knox, despite the glaring reality that no exhaustive independent verification has occurred since the Eisenhower era. Yet assuming the vaults are full, observe the accounting fiction at play. On the official ledgers, that bullion is priced at a laughable $422 an ounce. This is a fossilized statutory mandate from the 1970s, completely divorced from reality. As we speak, the open market trades that same ounce near $4,600 and accelerates daily. Do the arithmetic. At the archaic 422 rate, the nation's entire gold shield is worth roughly $11 billion absolute pocket change. That couldn't cover a week of interest. At $4,600, it swells to $12 trillion. Better, but still a drop in a $38 trillion ocean. But you must understand the ruling class ignores today's market value. They are solely focused on the revaluation number, the figure they will decree when the paradigm snaps. History provides the exact blueprint. In the depths of 1933, the executive branch criminalized private gold ownership. Under the shadow of federal prison, citizens surrendered their wealth for just over $20 an ounce. The moment the confiscation concluded, the stroke of a pen revalued that metal to $35. Instantly, the state debased the currency by nearly 70%, robbing the public of their purchasing power, while legally barring them from the lifeboat. Picture that exact sequence magnified to an incomprehensible scale. Envision the panic intensifying. Treasury yields violently spike to 8 or 9% as international allies dump our bonds. The budget gap goes vertical. Consumer prices surge past 15%. The machinery of finance shudders. Then an emergency broadcast. The commander-in-chief addresses a terrified public, declaring that to rescue the nation, a newly backed digital instrument is being deployed. To reflect the true strength of the republic, the sovereign gold reserve is instantly repriced by executive decree to $50,000 per ounce. Overnight, the government materializes $13 trillion in equity. They use it to clean up the central bank's books and project absolute solvency. If you are clutching paper notes during this transition, you are ruined. Your buying power is instantly evaporated. against the new gold standard. But the institution hoarding the physical metal emerges as the apex predator of global finance. Yet bullion carries a fatal flaw in the modern era. It is heavy, lethargic, and entirely analog. You cannot beam it across borders in milliseconds or encode it with compliance algorithms. The authorities require a digital hemisphere for their new reality. Enter the most astonishing pivot in modern financial history. For a decade and a half, the establishment relentlessly demonized Bitcoin. They branded it a speculative contagion and a haven for the underworld. Regulatory bodies launched unmitigated warfare against the ecosystem. They dragged major exchanges into court. They weaponized the banking sector to choke off capital pipelines, harassing traditional institutions, until they severed ties with any crypto-related enterprise. They attempted to suffocate it. Why the hostility? Because a decentralized fixed supply ledger represents the ultimate antidote to their inflation agenda. It requires no central permission, respects no national borders, and cannot be diluted. It is the perfect escape hatch. Then the winds shifted with violent suddenness. By early 2025, the hostile regulatory apparatus was dismantled. Key enforcers stepped down, task forces were dissolved, and the very administration that vilified the network shockingly designated it a strategic national asset, elevating it to the same untouchable tier as gold. How does a government transition from attempted murder to absolute embrace? They recognized the asset was unkillable, and what the state cannot destroy maneuvers to control the genius of their strategy. They already possessed a massive hoard originally seeded from Caesar's 69370 from Silk Road, 94,000 from the Bitfinex hack, 40,000 from other operations. Tens of thousands of coins seized and stored, at current valuations pushing past $100,000 a coin. It represents tens of billions. But exactly like their bullion, today's price is irrelevant. The target is the revaluation. Their strategy unfolds in predictable phases. Phase 1. Sanction the asset. Force the approval of institutional investment vehicles, pulling the network into the regulated Wall Street corral. Suddenly, it is sanitized, wrapped in traditional packaging, and placed in standard retirement accounts. Phase 2. Herd the public, convince everyday workers that this is a responsible allocation. But notice the catch. You are purchasing proxy shares, paper derivatives. You do not hold the cryptographic keys. Phase 3. The state holds the genuine article. While the public trades digital IOUs, the sovereign vault holds tens of thousands of authentic coins in impenetrable offline storage. Here is the trap snapping shut. As the currency's purchasing power violently degrades, panic takes hold. You scramble for safety. And the easiest state-approved lifeboats are those very same digital and precious metal funds in your portfolio. You, alongside millions of terrified citizens, liquidate your dying currency and flood into these vehicles. This manufactured desperation rockets the valuation from 100,000 to $500,000, then $1 million a coin. Observe the flawless circuitry of the snare. Dilute the currency. Spark widespread panic, funnel the terror directly into the specific assets the state monopolizes. Watch as the public's desperation exponentially inflates the value of the sovereign treasury. Finally, at the apex of the crisis, execute the reset. Reprice the yellow metal to $5,000. Peg the digital coin to whatever astronomical figure balances the ledger. Roll out the newly minted framework and brutally haircut the legacy currency. It is the most exquisite financial extraction ever engineered. This is not an isolated domestic strategy. Expand your view. Global monetary authorities have been hoarding bullion at furious, record-shattering paces, over 1,000 tons annually. Eastern superpowers are liquidating American debt, and stacking metal sovereign powers everywhere are quietly exiting the fiat experiment. They recognize the twilight of the reserve currency. They know the debt must be incinerated through inflation. In this looming paradigm, the entities holding unprintable assets dictate the terms. The great scramble is underway, and despite the catastrophic debt, the United States still commands the largest pile of both physical and digital anchors. So what does the singularity actually look like? Picture the late 2020 sovereign. Debt yields have breached 9%. The interest burden is suffocating the state. Real-world inflation rages at 20%, while the equity markets crater. The fiat illusion is breaking. On a Friday evening, the executive branch declares a profound national emergency to protect the integrity of the markets. A mandatory 72-hour banking freeze is implemented. For 3 days, your cards decline, the markets go dark. The information space devolves into absolute hysteria. When Monday dawns, a silent mandatory software update has altered your devices. A sovereign digital wallet appears. You authenticate only to discover that your $100,000 life savings has been converted into 10,000 units of the new digital standard. A merciless 10-to-1 confiscation. You have been stripped of 90% of your nominal wealth. Instantly, a subsequent notification arrives, assuring you that this new architecture is robust, fully collateralized by national reserves of $5,000 gold and $1 million Bitcoin. They vaporized your labor, but they demand your gratitude because the new system is sound. And facing starvation and anarchy, you will comply in this brutal realignment. The casualties are clear. The retiree surviving on a fixed stipend is decimated. The diligent saver is wiped out. Foreign allies holding our bonds receive pennies on the dollar. The state effectively walked away from $38 trillion by paying it back in heavily diluted new units. Yet the architects emerge invincible. Their obligations are trivialized, and their unprintable reserves are now valued in the tens of trillions. The reckless speculator who over-leveraged into a massive mortgage is perversely rewarded, finding his monumental debt reduced to a fraction of its former weight. Frugality is punished. Leverage is crowned, and the final lock on the cage? This new monetary unit is fully programmable. It features expiration dates, geographic restrictions, and instantaneous freezing capabilities. It is the pinnacle of behavioral control, and the population will willingly embrace it simply to end the chaos. That is the ultimate strategy. This is how the empire survives its terminal debt through systematic dilution, violent revaluation, and total technological capture. To navigate the coming storm, you must separate promises from property. The digits in your checking account are unbacked promises, and the promiser is defaulting. Tangible property, physical metals, self-custodied cryptographic keys, productive land, cannot be willed into existence by a committee. These are the vessels that cross the chasm of a monetary reset. If you want to survive the economic of fallen empires, you must detach from pure fiat-dependent secure real assets outside the paper matrix. Understand the paradox of leverage. Fatal if unmanageable before the crisis, but a potential wealth creator if it survives the transition. Ignore the rhetoric from the podium and scrutinize their vault receipts. They mocked the metal while hoarding thousands of tons. They criminalized the digital coin while stockpiling thousands of them. Transition will be terrifying, violent, and devoid of rules. The objective is not opulence. It is survival. The establishment is preparing to balance its catastrophic ledger on the backs of an unsuspecting public. The alarms are deafening. The architecture of the reset is already built. The only variable remaining is the clock. If this analysis shattered your perception of our monetary reality, ensure you are subscribed. In our next briefing, we will map the specific tripwires, guaranteed to detonate this transition within the coming years. Prepare yourself and guard your wealth.